Good evening. I'll read through 5 detailed news topics in a listener-friendly script, keeping the original points and figures intact. Topic 1. Escalating U.S.-Iran tensions, control of the Strait of Hormuz, and energy food risks. A fragile 2-week ceasefire is showing cracks. Iran says parts of the agreement were violated, including strikes in Lebanon, and is asserting control over transit, while the U.S. insists on full, unconditional opening of the Strait of Hormuz. Iran is effectively demanding permission or conditions to pass ships, with reports of proposals for payments up to $2 million per vessel or even cryptocurrency, prompting concerns the strait is being weaponized. ADNOC's CEO said the waterway is not open. Dozens to hundreds of tankers at times waited or loitered, many turning off AIS or rerouting due to fuel, insurance, and safety fears. Returning normal flows may take weeks to months as tankers, insurance, and routes are reworked. Physical Brent cargo prices shot into the 120s, reports around 124.7. U.S. crude briefly topped $100 intraday. Spot premiums over futures widened. Analysts estimate millions to tens of millions of barrels per day of Middle East supply and transport could be offline, and fertilizer shipments, roughly one-third via the Strait, plus a likely strong El Niño raise acute risks to food prices and harvests. The WFP warns that prolonged war and oil above $100 could add up to 45 million people to acute hunger. Key variables are ship safety, insurance and freight normalization times, and whether El Niño compounds production shocks. Topic 2. Inflation and central bank policy pressure. The Fed's preferred gauge, PCE, ran at 0.4% month-on-month in February and 2.8% year-on-year, with core PCE, ex-food and energy, at 0.4% monthly and 3.0% annually, still above the 2% target. March is expected to show further upward pressure from higher oil and gasoline. Fed minutes show officials still broadly expect rate cuts later this year as a baseline, but the Middle East shock and persistent inflation have raised warnings that further hikes could become necessary if price pressures do not subside. There is internal disagreement. Many officials favor rate cuts if growth and employment soften, while some argue the Fed must be ready to tighten again if inflation remains elevated, leaving the Fed exposed to a two-sided risk between inflation and employment. Policymakers left the policy rate at 3.5 to 35%, 11-to-1 vote. Future moves will be data-dependent, especially on whether oil-driven inflation proves persistent. Topic 3. AI and tech governance. Anthropic lost a bid in the D.C. Federal Appeals Court to block the Department of Defense's supply chain risk designation. Separate rulings have been mixed, and the practical result is Anthropic is effectively excluded from DoD work, though it may still contract with other government agencies. Meta has clarified ambitions and investments in AI, signing a roughly $21 billion long-term cloud deal with CoreWeave, and rolling out models such as Muse Spark, while continuing very large capital spending on AI infrastructure. Amazon's AWS reports AI services exceeding $15 billion on an annualized basis, with custom chip businesses, Graviton, Trainium, etc., generating over $20 billion on an annualized basis, AI infrastructure and chip revenue moving rapidly higher. At ProPublica, reporters and editors have gone on strike over newsroom use of AI. This and the Anthropic case underscore growing governance tensions over security, regulation, and journalistic ethics as big tech doubles down on AI investment. Topic 4. Corporate restructuring and consumer cost pressures. Disney is preparing roughly 1,000 additional layoffs, concentrated in marketing, as part of a cost program tied to marketing consolidation under Asad Ayaz and Project Imagine. Past cuts in 2023 were about 7,000, and the reported new reductions may be under 1% of total staff. There was no confirmable detail on Paramount leadership changes in the provided material. Airlines are